You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from this here ever-expanding Options Insider Radio Network, a myriad, a legion, a plethora of choices for you guys on the old network. Doesn't matter what camp you fall into, if you're a very basic retail guy, if you're an advanced institutional guy, financial advisor, futures options trader, techie, I don't care what segment you fall into, we have a program for you. And where's the best place to find all of them? Well, in our mobile app, of course, the Options Insider Radio Network mobile app, available for iOS, Android, and indeed the growing, the strengthening Amazon Fire OS. You can, of course, instantly stream all of your favorite episodes of the Option Block, all 300 and change now, quite a few, actually, for your listening pleasure. And if you're offline somewhere, well, then download a few of them for your offline pleasure on a plane or a train or in a deep, dark desert, wherever you find yourself without some signal, but in the need for some option blocking. And of course, while you're listening to the show, hit that email, hit that feedback tab and say, hey, I agree with you guys. I don't agree. I really enjoyed this program. I hated that one, or maybe less of the latter. And you put them all together. You can hit that button and shoot us an email, a Facebook question, a tweet, even leave us a voicemail. No shortage of ways for you guys to get in touch with us using that mobile app. So check it out. Available in iOS, Android, and even the Amazon Kindle Fire App Store. All right, and joining me on the old all-star panel today, we have the usual cast of characters. Starting off with the man holding down the Options Express by Charles Schwab hot seat, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Good to be here today, Mark. A holiday-shortened week, and just a little sort of teaser. Gold has gotten real active again in all forms here at OX.
I like it. A teaser. Well, since you're talking gold, we have to jump next to the gold bug himself, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, what do you think about that tease, sir?
There's gold in Demdare Hills and hi-ho silver.
Indeed, there is. Well, something for you to talk about a little bit today then, perhaps in the trading block. But before we get to that, listeners, let me introduce our last cohort contributor, partner in crime here on the old All-Star panel. You know him, you love him as the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
Pleasure to be here. Sweltering in Maine today. Actually, the breeze is coming up, but it hit 80.
Whoa. Crazy business, sir.
80 degrees.
You need to go take a deep plunge in the ocean. Stat.
I'm planning to do that after my class following this.
I love how we can delay all of your various main outdoorsy activities with some option blocking.
Well, there's that working thing still. Like, if I didn't work at somewhat, I would not appreciate all the main outdoorsy things that you deny me on a weekly basis.
All right. Since Andrew is champing at the old bit to go plunge into the lobster lake over there, aka the ocean, then let's get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. You know the drill. This is the portion of the show where we break down what we're watching, what is catching our eye, what is lighting up our collective tapes here. And it was, from a broad index perspective, not the most scintillating of days from a close-to-close perspective. Anyway, most of the major indices closing essentially unched on the day, up or down fractionally, no real movement in either direction. Again, reflecting that shortened holiday week that Alex alluded to. A lot of people already heading for greener pastures. Volume already light going into this week, probably going to be pretty light throughout the rest of this week as well. But there was some activity in a few sectors. Alex alluded to what was going on in gold. Ironically, today, Uncle Mike Tosaw, both GLD and Apple, your two primary holdings, both up 1.1% today. What's up? Was the fix in over there at RCM Wealth Advisors?
The fix is always in at RCM Wealth Advisors. People listen to this show and they listen to what we do. That's the way it goes on this show with the retail crowd. And just looking at Apple today, I think that it's pulled back a little bit, and I still think we're going to make a run at 100, and I think we're in a buying opportunity right now for Apple, and I'm not selling any upside premium on this. I'm just basically I'm viewing the upside right now with Apple, and I'm in a similar spot with gold. Came up a bunch when we had the first scare, so to speak, in Iraq, and it kind of plateaued a little bit, but now it's starting to apparently catch a little bit of a bid today. And the other thing that I found interesting, I really don't have any big positions in these, but just some things that I follow like GDX, GG, Silver Wheat, and some of the gold and silver stocks. They had a little bit of a run up today too. So this could get interesting in the metals. And by interesting, in comparison to today, that's really not saying much. But nonetheless, it is interesting.
You heard it here first, listeners. When Uncle Mike gets naked to the upside, you know it's time to pay attention.
What does that actually look like, do you think, naked to the upside?
I'd imagine that would just be topless.
He's not wearing a hat. Okay, I got it.
No hat. Hats are outlawed out there in St. Charles.
Thank God Mark Sebastian's not on this show today. Can you imagine where he would have gone with that?
It actually, I'm shuddering and shaking right now thinking of where he might have gone with that thing.
I mean, I'll tell you what, I refuse to talk about natural gas on this show after what he did to me a couple years ago.
He has kind of kiboshed all gas discussion on this program. Yes. Since we're hitting on gold, Alex, you brought it up. So what else caught your eye in today's activity, sir?
Well, gold closed the month up 6%. That's a pretty healthy stealth rally. I'll tell you what else has been going on here is we're starting to see some activity already trying to position trades for the Google earnings. Google, as always, posts the Thursday of the conventional expiration week, and we're seeing a fair number of upside trades, expecting Google's going to surprise here. I'm surprised how early they're doing this, but Google is always a real interesting company because they always, you think somebody at Google has this diabolical plot that says, let's always release our earnings on the Thursday of expiration week and see how many market makers and investors we can terrorize, make poor, or make rich by the fact that we're going to be releasing when the regular expiration has 1 day to trade. So we're already starting to see some of that. Other than that, it was a fairly quiet day. Not a lot else going on.
These are people obviously have a decent memory. They remember Google leaking their earnings a little bit earlier, and so they want to get in ahead this time. Make sure they don't miss the big Google pre-announcement announcement.
Exactly. That was a real interesting day because, the phones are ringing off the hook and everybody was saying, can they do that? And the answer is they just did. Let's not worry about if they can.
They just did it. It's happening. The stock is moving. Can they do that? That's great. I love that. That's fantastic. That's the kind of question you get at a broker in a day like that. And speaking of questions, Andrew, what questions were you guys fielding over there in the old Pit Chat today? By the way, I don't know if you know this, but I've rebranded it Pit Chat.
I think Pit Chat's not bad. Not bad at all. What did we look at today? We actually unwound an Apple position today, unwound some short iron condors and Tesla today. We looked at this Restoration Hardware, big, huge move up. Mark was looking at a couple of things. I think he was looking at Deere a little bit, but it wasn't a hugely exciting day. We didn't look at gold really till the end of the day, but I just unwinding some things and looking at the resurgence in Yahoo. Let's see if that Alibaba IPO can just drive that stock to the moon for like the fourth time in a year. I think there's a fair chance of that. So as the hype machine gets going, they're listed on the NYSE, and I can hear those investment bankers getting everybody excited. So, those are the main things. We also remarked on the non-recovery from all the refiners. They actually went lower today. So, that's what we were looking at. It wasn't a hugely exciting day. Volatility, the vol products actually did start to rally again after the president spoke. I don't know exactly what he said. I heard he was speaking on immigration or something, but whatever drop in the vol products we saw, it was funny because we were that one write-in caller on Friday in vol views about buying VXX. That was down 30 cents though from Friday, so he had it going there for a while, and then
he's off to the races.
So it might have paid for his decay over the weekend. But we'll see how that shapes up going into the non-farm payroll.
In his defense, he did say it was a freebie, so it didn't cost us anything, at least. Cost him some decay. Didn't cost us much. All right. Speaking of VXX and VIX-related things, we talked about what a quiet day it was on the street today. This will give you a good example of just how quiet it was out there. VIX, as we talked about many times from an options perspective, just tears it up, lighting up the charts all day long, pretty much every day you can think of. It's even averaging 600,000 right now in this relatively quiet volume period from an options perspective. Today, only doing 354,000 contracts in the VIX. Now, in most other products, that would be a titanic amount of volume. But in the VIX, that is anemic. When's the last time we got under 400,000 ADV in the VIX, Andrew?
I don't know. No, I can't remember. It's been a while. I actually want to look at a volume chart now and look. I'm looking at it right now as we speak.
So if that doesn't tell you how anemic it was today from a volume perspective, that nothing else will.
It feels like a half day.
Yeah, it kind of does. Kind of does. All right, then. And with the trading block pretty light today, we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Like the man said, this is the portion of the show where we break down the weird, the wild, the unusual, sometimes even bizarre activity that's catching our eye in the options markets. Going to kick things off with the return of our old friend here, listeners. If you've been listening to the show for the past few weeks, you know we've been talking a lot about some weird and wild activity we profiled out there in Dollar General a few weeks back. We were very early on that tip saying, hey, someone's buying up the earth out here. You got to pay attention to this. Of course, that was immediately preceding the Carl Icahn announcement. But we also commented on the fact that this guy, remember, listeners, he bought a ton of upside calls in Nove and Jan and even August, and also had some strangles on. But he never unwound the lion's share of that. Well, it looks like we got a substantial amount of that unwinding and indeed some rolling coming in today. If you watched a chart of Dollar General over the past few weeks or so, you notice this guy really had the best opportunity to unwind this position immediately after the announcement. It was one of those scenarios where the underlying popped, move in his favor. The vol also popped because it was a surprise announcement. You don't have that build up and then the air coming out of the balloon of an expected announcement like you do with an earnings. The vol didn't come off. It actually increased. So he had pretty much all things working in his favor, and yet he only unwound, I believe, a little bit of the nove and not much else. He was sitting on it, leading Alex to speculate that maybe this guy was frozen or forbidden from unwinding it. And Dollar General since then has kind of vacillated around. It got up as high in the post-announcement hyperbole, the hype there about 66, and then it's pretty much vacillated around the 61.5 range for the better part of the past few weeks. Taking it on the chin in the past few sessions, yesterday closing down about 4 handles or so and closing today at 57.36. So this guy had a great opportunity. He was on the right side of this trade, but then for whatever reason, he held off until finally taking it off today. Andrew, walk us through here. This guy who had such great timing and then for whatever reason let it all fall apart on the critical unwinding portion of the trade.
You know, I think that's when you just have to say, as in, how is he so good at putting it on, and how is he not so good at taking it off? You have to think on that one, how do those things happen? Maybe his information prior to getting long was not quite as good as his out signal, or as Alex said, he might have been precluded from exiting. However, it does look like he's trying to do it again. He rolled out of the 57.5 into the 62.5. So he might have made, I think he might have made some money on the 7.5s, obviously not the $7 more per contract he was looking for. But he obviously is trying to keep it going to roll it into the 62.5 because the volume, and he's rolling down. So yeah, he actually, I think he missed his, I don't know what he was looking for the upside, besides what he was getting there. But he's going to try it again. He's going to go out to November and wait around. But clearly, I mean, he's buying stuff that's $5 out of the money. So he's looking for that same move again. For all you listeners that are home gamers that are looking to try something like this, the guy still obviously is trying to stay in to see if it all happens again.
This reminds me of that listener mail we had last week where the trade goes my way again. Why don't I do that again? That's what this guy is doing. I should clarify, listeners, exactly what this guy is up to in case you're scratching your head. He did come in and sell a few, 72,982 to be precise, of the AUG 57.5s for $2.10, and then proceeded to reestablish his long position on the Nove 62.5 strike to the tune of 61,666 contracts for a price of $2.35. So he actually net debited 25 cents on the roll. So the AUGs clearly not unwinding those in time. I'm not sure what this guy was thinking. Well, actually, that's a good question, Alex. If your earlier hypothesis was true that he was initially frozen, this would imply that that freeze has been lifted or he's got some other way to trade these products.
Yeah, something strange is going on here, and I can't piece it together. I mean, I just simply don't know.
Join the club, sir. That's why we have the odd block. I should mention as well, listeners, that he's not done with the rest of his trade. He still has a ton of upside here. In particular, the Jan 75s, the Jan 2015 75s, to the tune of 20,000 of those that he gobbled up, as well as 20,000 of the Jan 2016 85s. So this guy is all kinds of bullish here in Dollar General. He just picked every strike he could find. All of those still open, still active, none of that other stuff being unwound. Just these AUGs that he was perhaps a little bit too close to the fire with. If any part of that position should have been closed off by now, it definitely should have been the AUGs. This guy really, really missing an opportunity. So this guy looks like, just doing a quick cursory check here on these options, looks like he left about $4 on the table. So listeners, multiply that by 72,000 and you'll get some idea of just how sad this fellow is right now. So there we go. This goes to our mantra a lot, that the size money is not always the smart money. This guy obviously knew something was up, but he, for whatever reason, thought maybe he hadn't caught the lion's share of the move yet. Maybe he thought Icon was going to announce something with Dollar General as well. Maybe he thought they were going to immediately announce a merger. Whatever the case may be, he chose to sit on his hands and watch all that juicy gamma that he bought go to zero.
That's officially an owie.
Yeah, you got your multiplier of 100 listeners, you got your $4, and then you got 72,000. That just hurts to say. If you're ever sitting there, listeners, saying, I wish I had access to the information, I wish I could trade on this kind of stuff, sometimes it could hurt at the end of the day as well. So we'll keep an eye on Dollar General again, because clearly something is still afoot out here. Something is up. Someone still has some size money to burn out here, and he's putting it to work. Moving on to another frequent player here in the odd block. I haven't talked about them in a few months, but they were pretty big, particularly back in the whole cruise ship debacle of last year and people playing these names. This is, of course, Carnival Corporation, ticker symbol CCL. They closed today $37.65, down about 30 cents on the day, as the name it does, about 3,500 contracts a day. Doing a few more than that, 57,000 to be precise, nearly 58,000, and pretty much all of that paper coming in just one massive ratio call spread. We saw the Jan 2015 39 half, 41 half. You gotta love these strikes. 39 half, 41 half, 1x2 call spread going up 17,507 times by 34,925 times. So a little bit of paper there. Looking at the open interest, the 19,000 open on the 39 halves, 35,000 open on the 41 halves. So looks like, I'm just going to guess, looks like this may indeed be closing. Mr. Rock Lobster, is that your take as well?
It is my take. I did find this interesting because the guy's timing was pretty good. It looks like he put on the 1x2, buying one, selling two. Taking kind of a little bit of a short delta there when Carnival Cruise was making a bit of a move. And this is one case where somebody had, some pretty good timing. So you put on the 1x2, give yourself a little bit more room in case the underlying goes up. I know Mr. Tosaw, this isn't his favorite type of trade, but in this case, I think it was executed pretty well. Probably somewhere around the 40 handle he did it, and pulls back to 37 and change. So he's saying, thank you very much. I think I'm going to take some money. So he blows out his long call and he buys back the two shorts, and I think he makes. I thought he probably made a tidy little profit here on this.
Yeah, it's a pretty tight 1x2. You don't usually see him going up like this, so he probably collected a credit to do this.
He would have to collect a pretty good credit.
Yeah, he probably did all right on this trade. So there we go, listeners. Someone with a little bit perhaps happier story than our friend, the ongoing debacle that is Dollar General. Man, a good reminder, too. A lot of you guys out there like to put on these 1x2s. Then you close out the long leg and you leave the shorts, because why would I buy back shorts? Here's a guy buying back 35,000 of them. If he can do it, you can buy back your 20 lot. So, all right, moving on to a newcomer here in the old odd block. This is my favorite, Companhia Energetica Minas. This is ticker symbol CIG, closing a penny shy of $8 today. This is the name that does, about 300 and change from a contracts perspective today. Doing not a whole heck of a lot more than that today, but I guess comparably from a historical perspective here, this is a ton of paper out here in CIG, to the tune of about 1,500 contracts. Well, what was going up in this explosion of paper? Well, in particular, there was some downside action to the tune of the DEES 7.5 puts. That's where the action was today, to the tune of 723 of them, to be precise. A ton, listeners, going up for 60 cents. Went up in a bunch of 50-lot blocks, essentially. Looks like someone came in and just blasted out, at least respectively for this name, blasted out the 60 cents bid, took as many as they could get out here. So short puts opening, because there's only about 200 and some change open on this strike. So some short puts on a near at the money strike here in CIG going out to December. Not a bad trade, 60 cents going on out to December. This gets you into the stock at around 690 if that's what you're looking at here. So not a bad return overall. If the stock stays where it is, you can get somewhere around 7%. So there are worse trades, perhaps, particularly if you're bullish. Our friend here, CIG. Senior Rock Lobster, what's your take here on our friend blasting out some comparatively sizable puts here in CIG?
Yeah, I like throwing the Portuguese stocks at you. Actually, it's Brazilian stock, but the Portuguese, names as you struggle with the pronunciation in your what is that, a baritone voice you have?
I can take whatever you throw at me, sir.
You do a good job. I feel like I'm seeing more of these where stocks that haven't done much, especially some of these mineral stocks. Kind of the ETFs, they don't move very much. People are going out, selling some out of the money puts, looking for yield, looking for, basically they're not trying to reach for that super upside. They're saying, you know what, if the market just does this or kind of pulls back a little bit, I'm just going to take my put premium and go. And that's what this type of trade feels like. Seeing it more and more on names that haven't done very much. Now that the market, as Tosaw would say, it has never been a better time to sell your stocks than it is today. So, I mean, we're still kind of at that level for at least the S&P 500. We're pretty close to it. I'm just waiting for that 40 handle day so we can just break through 2,000 and get it over with. If anybody thinks that's not going to happen this year, unless something really ridiculous happens, I don't see how we don't hit that number. But that's what this looks like to me. Just simple trades, trying to generate some money, but definitely not, go long for sure.
All right, listeners, and after that explosion of volume we talked about at the top of the option block, we got to dial it back a little bit. We can't send you out of the option block all hyped up on crazy option volume, so we're going to wind things down here with another newcomer to the odd block. This is Amicus Therapeutics, Inc., ticker symbol FOLD, F-O-L-D, closing today at $3.34, up about 31 cents or about 10% on the day. So a decent day here for FOLD. This is the name that does about 250 contracts a day, doing about 10x that, 2,500 contracts to be precise. So a fairly active day out here in Amicus Therapeutics. What we profiled on the site earlier today was some action in the AUG5 calls to the tune of 190 when we profiled them, and a total of 261 on the day. But that was not the biggest trade out here in good old FOLD, not by a long shot today. We actually saw some other activity going up. OCT 2.5 strikes, 4,000 open, seeing about nearly 700 of those going up today. So those are fairly deep in the money calls, as well as the Jan 5 strike, which has about 4,000 contracts open on it as well, trading nearly 600 contracts. And also the July 5s trading about 200, 300 contracts out there on that strike. So a fair amount of activity for this little name. The 200 lot of the AUG5 is really just the start, the tip of the iceberg out here in FOLD. Mr. Giovanazzi, take us home with this plethora of paper in this little biotech name.
What gets me is how these August 5s traded. The market was like 10.30 at the time, 10 cents, 30 cents. And paper just came in and paid 30. Bloop, bloop. Lifted 2 exchanges, had to have them.
It takes time to work things, Andrew, and sometimes you just need it. You just need it right now.
You need those AUG 5s for 30 cents when the stock's trading 3.5 or 3, I think. So, I realize it's, it was made a 52-week high. It is a therapeutic company, so I'm sure Alex will have plenty to say on every, Tom, Dick, and Harry biotechnology company that's starting to, do something anyway. But it looks like some short call covering on some of the shorts. What was interesting to this, there was no open interest at all. It's just got to have them. And who knows where this stock goes. But I'll keep an eye on, at least see if we get any more movement out of it. But I like it. They make pharmacological chaperones. That's what they make, a pharmacological chaperone.
So they'll take your daughter to the prom?
Exactly. You send these products with your daughter to the prom, and that keeps her apparently safe, I guess. There's got to be a market for that.
I think if I had a daughter, I would invest in some pharmacological chaperones.
Yes.
But you listeners, I should point out, too, that, we talk a lot about big trades here in the odd block, but sometimes it's not just the volume we're looking at. It's also clearly the intent behind the trade, the way it was executed. When someone comes in, like Andrew, we were just joking about it, but when someone comes in and lifts an offer on a relatively worthless option like this, and they have to have it right now, That usually raises our hackles a little bit as well. So we keep an eye on all this kind of weird stuff out there. Hence the name, The Odd Block. All right, and that's going to do it for this segment, listeners. And now we're going to keep on rolling right on into the Viceroy Block. Yes, it's time once again for the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, welcome to the Express Block. This is, of course, the portion of the show where the man with the fancy hats takes the reins, and I take a bit of a rest. But before I do, Alex, I break out the minions usually when it's time for the strategy block, so I get some insight into what Tosaw is going to bring to the show, because you never know, frankly, what that guy's up to. But they also bring me some other scoops every now and then. They've been whispering in my ear all day today about Hub and Apple. Like something's up with IdeaHub and Apple. So I'm going to go out on a limb and say, Alex, you guys were seeing some activity out there in IdeaHub, and it was focused around Apple. What do you think? Are my minions, are they worth their weight in jams and jellies?
As usual, your minions are spot on. And I'm going to use the Express Block to talk about a couple of things today. And I know in the last few shows, we've talked a lot about the introduction of premium harvesting for futures options. And in a sense, I've talked a little less about the original premium harvesting, which was for the traditional securities options. And one of the questions that's come up a lot lately is premium harvesting for securities options looks for credit spreads and iron condors. And the metric is written so that in Apple pre-split, it looked at credit spreads $10 wide. In fact, the metric is such that when an instrument is over $100, which almost all the equities in premium harvesting, they're Apple, Amazon, Google, Goldman Sachs, and IBM, the 5 equities that SIBO calculates a volatility metric on. And I know that's kind of a quick explanation, but one of the questions that's come up a lot lately is post-split, Apple is now under $100. So Hub is delivering under $100. It looks at $5 wide credit spreads. And a question I've got a lot lately is some of the ideas in Apple are obviously put spreads that are under $100, but the call spreads are over $100. But Hub's metric looks at the stock price. So it's going to deliver $5 spreads until Apple crosses that $100 mark. When it does cross the $100 mark, it's going to revert back to $10 spreads. I know that's created some confusion because I get a lot of emails from listeners, and obviously I get emails from non-listeners who are Hub users, but I just wanted to clarify that point, that under $100 looks at $5 spreads, over $100 it looks at $10 spreads. While I'm on the topic of Hub, I looked at it just before we came on the air, and between the what I'll call the conventional premium harvesting, which is the securities side stuff, the Apples, the Spiders, the SPX, the SPX PM, low volatility, we still had over 50 ideas in the conventional Hub. And on the future side, where we're only looking at 4 names, the E-mini S&P, E-mini NASDAQ, gold, and crude. And again, keep in mind, gold and crude close early. We had 30 to 50 ideas all day. Now, it drops off a little bit when gold and crude close, so that then the ideas are just the E-mini S&P and the E-mini NASDAQ. But if you're looking for credit spread ideas, Hub during most of the day today was delivering 102, 103 ideas between the future side and the securities side. So I just wanted to take a minute to clarify what's going on in Apple. because that's a question that comes on a lot. And that's the Xpress Block.
Alex, what percentage would you say of hub activity, 80, 90%, is in the premium harvesting versus the premium outlaying side of the fence?
Yeah, it's almost all in premium harvesting. There are 5 tiles in hub. There's an earnings tile. There's a what's trending tile, which draws from our dragon, which essentially is the unusual activity research tool we have on our site. If you're an OX customer and you go into the toolbar under Toolbox, you'll see something called the Dragon. And what the Dragon does is exactly what we do on the show every day. It looks at unusual activity and it lets you filter by open interest, volume, implied volatility to historical volatility. Those areas predominantly are used for price discovery, but the 3 areas of hub that tend to get used, well, premium harvesting is generally about 80% of the activity in hub. It's also in many ways the most creative, and I'll just do a quick rehash of it. What we do essentially is we take the CBOE volatility benchmarks, things like VIX, QVIX, RVIX, the VIX of Apple, the VIX of some of the other ETFs, and we use that number to calculate a 1 standard deviation out of the money credit put spread, credit call spread. We do it on the GLD, we do it on the SLV. Where appropriate, we calculate an iron condor, the combination of the credit put spread and credit call spread, and that's far and away the busiest area by almost a factor of 8 or 9 to 1.
Gotta love those OX clients. They love to harvest themselves some premium. All right, thank you for that, Mr. Viceroy. That's going to do it for the Xpress Block, and now we're going to keep on rolling right on into the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it's Monday for us. That means it's Tuesday for you, and that means it's time for the Strategy Block. This is, of course, the portion of the show where Uncle Mike puts on the old smoking jacket and grabs the bubble pipe. And if he's feeling in the mood, he'll grab the old stone tablets as well to dispense some options, wit, and wisdom. And I know, Uncle Mike, we talked last show, a listener wrote in with a question about when he should repeat his particular trades, and pretty much all of us came down against that particular idea. I mean, there are scenarios where that makes sense, but as a rule of thumb, just expecting your trades to work out again and again, not exactly perhaps the best system. But there are times, speaking of systems, when you perhaps want to deviate from them or take a step back. And I'm guessing that's something you're going to want to chat with us about today. Am I correct, sir?
Man, you have great minions, and you are the king of transitions, I gotta say.
They did double duty today, sir, so they earned their jams and jellies.
I tell you. I want everyone to think of a time when they were children and you played King of the Mountain. And so you start off playing King of the Mountain, the guy's on the top of the hill, and anyone that comes up there, he just beats the crap out of and throws him down the hill. So when thinking about that, maybe that works for about 2 or 3 times when that happens. And when doing so, after maybe the 4th or 5th time, one of the kids gets hurt because you accidentally kicked him in the middle of his back. So then you start off, okay, we'll still keep doing what we're doing, but no kicking. Okay, fair enough. So then another kid complains because he loses a tooth. Okay, no punching in the mouth. And you gradually make more and more exceptions as you go along. You never know exactly what's going to happen, but as you go, you kind of get a feel for it. And so today I want to give you some examples of how that kind of works with me with trading. So 3 of them, actually. The first one, I was on the phone with a client today, and so he was looking to he was naked in option. Now, keep in mind, we're not typically that much into naked options, but this is a portfolio margin account well into the 6 figures, and that's what he does. It's one to where he can afford to be naked options. And so he was saying, okay, I want to take some of this risk off the table by buying another option to create a vertical spread. But you know what? I just don't feel comfortable doing it now. Well, actually, I don't feel comfortable with this naked option anymore because of the fact that I don't want to be naked for a long period of time this week. So I told him, okay, here's one of my exceptions to the rule. in that let's say that you want to break your rule because he had a limit order out there to buy the hedge leg of his spread. And I'm typically not a fan of legging into spreads, but this client is. And so it's not a discretionary account. This is just a client who calls and asks for advice from time to time. So with that, he had his limit order working to leg into the spread to create a put spread. And I told him one of the exceptions that I'll make on my rule is that I'll allow myself to break the rule if it's to take risk off the table. And so I'm looking at this and I explained to him the hundreds of thousands of dollars that he had at risk on the table, and it seemed to make sense. Now, granted, it was a very well-managed position, and the client ended up making the decision to just simply close out the long leg for a profit. But moral to the story is that when you are going to break a rule, it is okay to break a rule if it is to be more conservative in what you're doing. A lot of people say that, or some people say that not to do that. The argument against that is that if you take profits too soon, that you're going to take significant percentage points off of your rates of return, and that's okay. With my style of trading, I'm fine with that because I just prefer not to have the rates of return in the negative. I like them to be positive, and that's worked out for me through the years. Now, another rule that I have that I make an exception for is I personally do not like trading in the first hour of the day. Markets are too choppy, and a lot of times things it doesn't work out for me most of the time. So years ago, I just decided not to make any transactions in the beginning of the day if I can definitely help it. Once again, this may or may not apply to your strategy, but this is one with which I have. Now, some exceptions to that would be if it's a closing transaction. By the way, these exceptions are part of the rules themselves. So let's say in theory, I sold a naked call or I sold a naked put and it's worth a nickel and it opens up at the market. It's worth a nickel at the open of the market. If that's the case, even though it's at a nickel, if I had some type of overnight gap, guess what? I'm trading the first hour of the day because I'm not going to wait another hour for it to get down to 4 cents or whatever. Number one, even assuming it's a penny option for hour 2 of the day. So when getting out of a trade, I feel it's okay to trade in the first hour of the day, but typically I'm not a fan of getting into a trade in the first hour of the day if I can absolutely help it. There's times with which I would, and there are a couple of other exceptions, but most of the time I would not do it. Now that leads me to the third example of this week. Going into this week, I don't want to do any trading. It's a lower volume week, and it's just not going to be one to where I want to play these markets. I'm not looking to get premium out for this week, even though it's a 4-day week. It's just not something that I want to mess with, quite honestly. And yes, I'm monitoring positions just as closely as before, but I will say this. Should Apple have some big run up this week, right now it's at a little over 93. I'm looking at in the aftermarket. If Apple's up at 96 or 97 in another couple days, guess what? I'm selling some premium on Apple this week, and that's going to be kind of an issue to where I prefer not to trade in a low volume week like this week. But if the prices dictate with which I have to, then I'll do it, and I'll gladly do it for that reason. So when making rules for trading, remember, you can change your rules, but just don't do it too often. From time to time, come up with your rules and say, hey, are these rules working? Why are they working? Why are they not working? And that's okay to change the rules. Remember, it's just like playing King of the Mountain when you were a kid. That's one to grow on for today.
Remind me never to play King of the Mountain in St. Charles, Illinois. It sounds horribly violent. All right, that's going to do it for the old strategy block, and now we're going to keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Usually we do the mail block on Thursdays, but as we said at the top of the show, this is a short holiday week, so unfortunately there will be no option block recorded this Thursday for you to listen to on Friday, so we'll squeeze in a quick question right now. We're going to start off with a question from a listener who goes by the handle Aviatrix, and she writes, hello, All-Star panel. Great program. I have a question about option open interest. I don't really understand it. I've read some blogs that say open interest can impact a stock's direction during expiration week. Is this just, as Mark would say, the tinfoil hat crowd, or is there something to this? Should I be tracking open interest as an indicator? Keep the wit and wisdom coming. Well, Clearly, this lady here is a longtime listener. She knows the show pretty well. I'll say this, Miss Aviatrix. There is a reason we pay attention to open interest on things like the odd block, because it is informative and useful when you're doing things like unusual activity analysis. You want to see if people are actually opening or closing, if they're adding to an existing position or unwinding it. That is very valuable information, so you can kind of use that to read the intent of a trade. When it comes to what you're talking about, using open interest as some sort of indicator of underlying movement, it is less useful. I will say you did pick the one specific scenario where open interest can have some weight, and that is during expiration week. We talked many times on this show and others on the network about, that final week of trading, or in the case of weeklies, every week, where everything is just pared down to the bone, time decay is exploding, gamma is exploding, and things are pretty crazy. And in that environment, when you have a stock that's trading near a strike where there is some very high open interest compared to some of the other surrounding strikes, there is a higher probability that this underlying may gravitate toward that strike. Remember, we've talked about gamma scalping in the past and hedging, and that's kind of what's going on there. If there's a lot of gamma on that strike, traders' hedging activity on the underlying, that will tend to keep the underlying pinned or locked around that particular strike, which is why on a lot of options names around expiration, you might see underlyings closing at oddly even prices, 92.5 or 95 or very close to that, because there is a lot of open interest. In general, there could be a little bit of this gravitational effect around expiration week, but not a ton. I wouldn't go crazy with it, but it's something to keep an eye on if you're worried about pinning and pin risk. Mr. Andrew, what do you tell your folks in your chat room about open interest and pin risk?
Well, open interest is kind of like, there's a mountain over there. How did it get here? I don't know. I mean, so if you don't have any insight into like what the client was doing when they bought or sold, that's why we have unusual activity. We try to pin the activity on the trading day, and then sort of it's useful for, compare to open interest, so if there's not a lot of activity in a name, there's a low ADV, and all of a sudden there's a lot, so a stock you're interested in, we're like, well, why is everybody buying all these calls? Why is the open interest increasing? So there's certainly some questions to ask. Then again, if you trade a stock like Apple, where the open interest is about a bajillion contracts, the only real use might be like, where it might have pinned on expiration. So, and even if you do something maybe like Mike does, where, maybe I'll sell some more calls, like 3 or 4 days to go to just try to generate a little extra jing for my account. You might look at it for something like that. But, that's about it. I don't think open interest is hugely, I don't think it's as important as people think it is, to be honest.
Yeah, I'll agree with that. I think it really gets a lot more play than perhaps it merits. This is the one scenario she mentions where it might have any real impact, aside from what you and I do on the show every week, Andrew, parsing open interest to kind of determine intent. I think that's a much more valuable use case for open interest than what she's saying here. But it's something to be cognizant of if indeed you are looking at a strike around expiration and the underlying is acting a little wonky. Perhaps the options are to blame there. All right, great question, Miss Aviatrix. That's all the time we have for the old mail block this week, and now we're going to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, as we said at the top of the show, it's a short week, so bear that in mind when you're trading. You're already seeing the effects of decay of the weekend starting to be taken out of the marketplace. Uncle Mike said he won't even trade this week because he doesn't want to touch it. Volume is light across the board. I said the VIX is hitting probably record lows, at least for the last couple of years at this point. So certainly something to bear in mind in your trading if you even want to put anything on this week, because these are crazy times. Uncle Mike, since you said you're sitting on your hands this week, perhaps we'll start with you because you'll be pretty quick.
Getting geared up for the big fireworks show in downtown St. Charles this Friday night. Taking the boat out on the Fox River. We're going to watch the fireworks from the river, and it's a good time. That's what I'm watching.
That's what you're watching. I like it.
But in reality, though, just like a fireman watching the markets in case there's a fire, we'll do what we can to put it out, but I'm really not expecting a whole lot this week.
And don't forget, listeners, when he's doing that, he's naked to the upside. All right. Mr. Andrew, save us here. What are you watching for the rest of this week?
I just realized that potentially Alex could never be naked to the upside because he's always wearing a hat. It just struck me.
You're right. He's always covered.
He's always covered. But that should make sense coming from, the risk type doctor that he is for OX.
That's a sign
Always
of a true pro. Always covered.
A walking covered call.
A walking covered call. What are we watching? We're trying to find something to watch. We're actually started closing some short premium trades. I would say the volatility products might start to get a little interesting toward the end of the week. We might see that tailspin crush for the vol products on any kind of decent non-farm payroll news. Because at this point, I think they're thinking that first quarter is all just didn't really happen, and maybe this next quarter should be a little better. So, we see solid growth, probably, good for gold again, probably not so good for treasuries, although it seems like not much knocks them down as long as there is a caliphate in northwestern Iraq now. So still waiting for that news to matter, but apparently it doesn't. I mean, could anybody here in this room, especially like old timers, if you actually had some sort of war in the Middle East, like a shooting bang bang war, and the price of oil like goes up like $3 and stops and doesn't do anything? I mean, we have a vastly different oil market if that's the case. So what's weird is for some reason, just things that should be shocking, at least up till now, have not been shocking. So that's what we're looking at. Maybe adding a gold trade, maybe adding a vol trade. I kind of like the idea of, some kind of little backspread in gold, and then possibly short some volatility in the vol products. That way you can get kind of you just benefit from a parabolic move. So, that is the kind of stuff we're looking at. That's what we'll be creating in the chat tomorrow, most likely.
All right, take us home, Alex. What are you watching for the rest of this week, sir?
As Mike pointed out, it's going to be a quiet week, and I think the thing that kind of went unnoticed today was it's the end of the month, so there was some rebalancing being done today, a little bit of rebalancing. There'll be a little bit more tomorrow, but it's going to be a quiet week. Markets are going to be thin. If you're trading any of the cash-settled indexes, don't make the same mistake. Last time we had a Friday holiday where people were walking around on Thursday morning going, they're gone already. So be aware of that. This stealth rally in gold and this stealth rally, this sort of summer doldrum market we've had, at some point this market's going to break out one way or the other, and then everyone who's been forecasting will be right or will either be early. So looking at stuff like that, but it's going to be a quiet week. If you've got short positions that are trading for pennies, don't leave them. Get out of them early in the week. I know it may cost a couple more commission dollars, but it's going to be a thin week.
All right. With all that said, and all of us watching the exceeding thinness of the markets, I think that's going to do it for this episode of the Option Block. But before we go, as always, listeners, let me check in with each of my cohorts here on the old All-Star panel, see what's cooking in their neck of the woods, something for you to do the rest of this shortened holiday week when you're not listening to the next episode of the Option Block. Mr. Viceroy, we'll start with you. What, if anything, is in store for us at OX Education and live events?
Actually, the next live event, because we're not going to do an event in July, is August 9th in San Francisco. And that's going to be a big event because obviously OX customers, Schwab customers, San Francisco's Schwab's hometown. August 9th, free event on Saturday. Quiet week this week, couple webinars next week that I'll showcase now. July 8th, Tuesday, Dan Gramza is going to be talking about current trends and strategies in the euro. And again, a little bit of a stealth rally going on in the euro. Wednesday the 9th, Nina is going to be talking protective puts in IRA accounts. All the events are free. Come to optionsexpress.com and click on the education tab.
All right. And Mr. Tosaw, what's cooking over there in the land of RCM Wealth Advisors?
Oh, we don't have any events coming up. We're just kind of enjoying the fireworks this weekend, but definitely head to our website, rcmfutures.com, rcmwealthadvisors.com. Sign up for our newsletters and whatever we need to do, whatever you would like to do. We have a lot of great material, and I would love to see you there.
All right, and the Rock Lobster had to run, listeners, but of course, if you want to check out what he and Mark and the rest of the gang over there are chatting about every day, then surf on over to optionpit.com, sign up for their pit chat. I believe they have some deal right now. You can get the first month for some ridiculously nominal fee, and you can check it out for yourself. If you like what we talk about every day on this show and you want to do it all day long with the guys from the pit, then that is indeed your opportunity, optionpit.com, to check it out. And on behalf of Andrew and Uncle Mike and the Viceroy and myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show. Quick reminder, again, it is a shortened holiday week, so there will be no Option Block coming out for you guys on Friday, but we'll see you again next week right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.